So there's just a ton of absolutely insane stuff that happened to Nokia's stock since the last video, gapping up almost 22% on an incredible rally to more than $5.80 again. As mentioned previously, Nokia was one of the stocks that went crazy at the beginning of the year during the retail-driven January short squeeze mania. However, like we've seen it happen multiple times before, the stock came tumbling back down to pre-squeeze levels. As of right now, however, we're actually only 10% away from the massive spikes at the beginning of the year, making Nokia one of the best performing companies out there. So what we are going to do today is give you an insight into what is happening to Nokia's stock and break down exactly whether it is still a buy at the end of this video. And as the analysis in the next few minutes is absolutely crucial to consider before buying the stock, make sure to stay tuned. Really quick before we jump right in, just hit that subscribe button down below. And as we'll keep you updated on breaking news and awesome trading opportunities every single day, subscribing would not only help us but also you. So there is really no excuse for not smashing the subscribe button, it's free, and you can always unsubscribe if you feel so. Alright, let's start talking about the stock. And if there is one thing you need to know about the company, then it is that a lot has changed, which is super important to consider for our prediction at the end of this video. Nokia's new 5G infrastructure business, in particular, appears to be very appealing. But what is even more incredible is its estimated growth, which is expected to be at a compound annual rate of 67% by 2027. Nevertheless, the 5G and network expert has had severe issues in recent quarters. For example, in September, it lost out on a massive $6.6 billion deal with Verizon Communications for the supply of 5G equipment to Samsung. And although the US telecom service provider remains a key customer for Nokia, the event highlighted the company's diminishing competitiveness as a result of challenges with acquisition integration and innovation. So the question is whether Nokia can stay afloat in the increasingly competitive industry. Management predicts, however, that its market share in 4G and 5G mobile access will remain at a whopping 27% by the end of the year. However, that projection excludes China, where the corporation has become more cautious due to the enormous market's uncertain profitability. But in order to reclaim its position at the top, Nokia devised a completely game-changing strategy known internally as the Great Reset. As a part of this reset, the company, for example, plans to reduce the headcount by as much as another 10,000 people. And as this is crucial for the prediction at the end, let's take a closer look at this reset and what it means for the company and its stock. And as previously said, Nokia would reduce its employment count by up to 10,000 people over the next 18 to 24 months, starting at around 90,000 they have now. By the end of the restructuring, Nokia plans to save more than $700 million each year, but the savings will not be used to increase the company's bottom line. Instead, Nokia will make focused investments in R&D and infrastructure. From here on out, it'll all be about 5G networking, cloud computing, and digital infrastructure. And overall, the restructuring costs should be nearly identical to the cost savings. Management expects operating margins to rise by roughly 10% this year to a range of up to 13% by 2023 as a result of this strategy. And taking a look at the recent second quarter earnings reports who got released literally a few hours ago, it looks pretty good for Nokia as well. In fact, sales were up 9% on a year-over-year basis, with some strong growth in almost every business Nokia is involved in. But the point is that, aside from areas where Nokia excels, it must execute flawlessly over the next several years in order to further improve its financial outcomes to moderate sales growth and modest operating margins. If it does, and it has already begun its reset, the future seems bright, which also explains the average price target of at least the January highs we have. Alright, with that being it for today's video, thank you very much for watching. If you liked this video and want to support our mission of providing free financial information to everyone here on YouTube, please ensure you're subscribed and definitely consider leaving a like. As mentioned before, it really means the world to us. Thanks a lot and see you next time.